Hi, we want to show you a little bit about how to use time-dependent tax calculation to make your work easier. If you want to activate time-dependent taxes for a country that's in scope and need more information on how to do that, you can find it here on the SAP Help Portal. Here's all the information you need for activation, along with a how-to video showing you how to get everything started. This video shows you a little bit more about how to use time-dependent taxes once everything's up and running. Most of what we're looking at here is taken care of by your configuration expert, who is responsible for making changes to tax rates and for taking care of the tax box mapping. I'm an accounts payable accountant, and I'll be showing you how time-dependent taxes help me. Let's start by making a change to a tax rate. We need to log in to Manage Your Solution, then open Configure Your Solution. Under Finance, then under Statutory Reporting, let's open Tax, and then here. We need the Define Tax Codes for Sales and Purchases configuration step. I enter the target country, in this case Germany, and then specify the tax code. I'll use V2 here. Next, I'll set the date as of when the new tax rate is valid, January 1st, 2020, and then hit Enter. The existing tax rate is 7%. I'll go ahead and change it to 8%, then save. And here is the message letting me know that my change was successful. Bear in mind, you should only do this when you know about a tax rate change. And remember, once you make this change in your quality system, it will be transported to your production system, and you cannot delete it once you've saved it in your quality system. If I go back in, I can take a look at the validity periods under Periods. The system does not permit gaps or overlaps in your tax rates, so it automatically delimits validity periods when you add a new one. In my case, since I set January 1st, 2020 as the new valid from date, I can see that the system automatically ended the previous rate as of December 31st, 2019. That's it. Now for all tax-relevant postings after January 1st, 2020, in this country, for this tax code, the new 8% rate will be applied. In my case, making this change means I have to go and change one of my tax box mappings. So I head back out to the tax configuration steps and select Configure for the Maintain Tax Box Mapping for Advanced Tax Return step. I enter the country and select the tax box structure that I need to maintain. I then select Tax Boxes and pick the tax box that I need to update. I know that this tax code maps to box 66, so I select 66, then Copy As. I'll change the name of the tax box to the new tax box defined by my tax authority. For this demo, let's call it Z66, then copy and save. Now I select my tax box structure, then select Tax Groups. Then I scroll down, select 66, change the name to Z66, enter the correct valid from date, and look. The system lets me know that records will be delimited as necessary to prevent gaps or overlaps. So I just hit Enter, then save. And the last step here. I go into Map Tax Box to Tax Group, select 66, select Copy As, and map Z66 to Z66. That's it. By now I've made the rate change I need and have maintained my tax box mappings. Everything is in order now, so let's take a look at how the changes will appear in our work. And this is where time-dependent taxes help me as an accounts payable accountant. Let's create an invoice and look at how time-dependent taxes work in that context as an example. I'll fill out the necessary information, select the vendor and the invoice and posting date. The system lets me know that the invoice and posting dates are in different fiscal years, which is fine here, and I'll add a short reference. Then I need to add the GL account and amount. I'll expand the tax code column so I can see it a little better, and for this particular invoice I need to add a cost center. With all of that set up, I select Calculate Tax, then I select the tax code from the drop-down. If I now select the Tax tab, I see a number of things. First, I can see the tax amount. Here, the tax is included in the net amount. If it were a different transaction and the tax were applied to the gross amount, then my balance would be $1080, but in our case, the tax is calculated as part of the net amount. But look at this. I spotted this on the previous screen too. When we added the new validity period and rate to the tax code, we didn't maintain the description, so in our invoice, we see an 8% tax being described as a 7% tax. This could be confusing, so we'll want to go back and fix it. So to take care of this, our configuration expert goes back into the Define Tax Codes for Sales and Purchases configuration step and checks the properties for tax code V2. Here we go. For our company, we'd rather just take the percentage out, and then we'll select Continue. This version works for our company, but you should edit the description in the way that makes the most sense to you. Our configuration expert lets me know that it's taken care of, so when I go back into my invoice, I can see that everything is correct. I have the document, posting, and tax reporting dates. I see the net amount, the gross amount, and the tax amount, and the short text accompanying the tax now reflects the new description we've just made. Now when I post the document, I can display it in the data entry view, which doesn't yet show me the tax information that I want to see. So I'll add some columns to my view. Let's go ahead and add tax date and tax rate valid from, then use the check mark to adopt the changes. And there's the tax information that I want to see. And that's it. That's how you can use time-dependent taxes to make your work simpler.